presents CNBC TV 18, the Indian Crypto Summit 2021.
Hello and a very warm welcome to the very first edition of WazirX presents CNBC TV 18, the Indian Crypto Summit 2021. It has been a great past 12 months for the crypto and the blockchain industry with newer coins, platform upgrades, new products like the NFTs and GameFi, which have seen an explosion. New investors have come into the market in hope of higher returns and also to be part of this journey. Individuals, institutions, and businesses are investing in technology. That and the evolving regulatory conversations and dialogues across geographies and taxation is something that we all are keenly watching out for. The segment continues to trend on top in the search engines as the crypto prices moves catches the retail fancy. With an estimated 15 million users and $6.5 billion of a market size and growing, India has the second highest crypto adoption rate in the world. So we have in store for you an exciting fireside chat coming up, followed by absolutely interesting, informative, and insightful panels where we try to bring you up to speed with the developments as we go along, understanding crypto as an asset class and concepts like DeFi lending, tokenization, and its impact on the economy. And we talk about India's startups in crypto and success stories and learnings therein. So let's get in first conversation going, and joining us for that is Charles Hoskinson. He's CEO and founder IOHK. We are also joined by Nischal Shetty, who's founder and CEO WazirX. Gentlemen, hi, and thank you so much for joining us on this evening here. Charles, I want to start with you. With more than 2,000% of gains this year for ADA, and that has quickly gained in ranks on the back of Alonzo network upgrade. What is the update on this? How have you observed the market reaction, and what is the road going forward?
Well, yeah, this has been a very good year in general for cryptocurrencies. We've seen enormous growth in both adoption and, of course, valuations, and it's both exciting and at the same time it is perhaps a bit irrational, the exuberance we've seen in these markets. And so what we're very focused on is just use and utility and building, and we're very focused on growing the mission of our organization, which is to improve the systems of the world for everyone everywhere. So we announced, for example, this year, the Ethiopia deal, and we gained 5 million users with the Ministry of Education using Atala Prism on Cardano, and we have more deals coming. And we see now with smart contracts, a great dApp ecosystem growing around Cardano. And that's what we remain committed to as an organization. And we're very excited to see how that grows, where that grows. In general, crypto adoption has been pretty phenomenal. This year, I think there's an additional 50 million users worldwide into the entire cryptocurrency ecosystem, and a lot of consumerization of that, especially amongst verticals that were unanticipated. For example, NFTs have been an incredible growth area, and that brought a lot of musicians and not so usual suspects into the cryptocurrency space. And Cardano has been a very strong player in the NFT space. Over 100,000 NFTs have been issued on Cardano thanks to our native multi-asset standard. And there are a lot of NFT platforms that are supporting and migrating to Cardano. So we think that that's going to be a very strong area in 2022 in our ecosystem. But that just shows you that just when you think you know everything in the space, something comes along and it surprises you. And in this case, very pleasantly surprised us all.
Nischal, this one is to you. Staying on with the acceptance globally and in India for Cardano, ADA that is, would you say that the markets understand the use cases and also on where to invest going forward?
If you look at the India market, I think while we started off slow as a nation into crypto, it's definitely picking up speed now. And the level of understanding that the people in India have in crypto, it's been increasing. And there have been a lot of efforts by startups in the crypto space to educate people and to get them to understand and have a deeper understanding of crypto. In the initial, I would say the 2017 to 2020 time period, a lot of people, the majority, was into this purely as a looking at crypto as a speculative investment option. Now, what we are seeing is that a lot of people understand the reasons why they're investing into crypto. What are the different kinds of tokens? A simple example would be a lot of people we interviewed, the investors, they thought that every crypto was a currency and it was here to compete with fiat currencies. Today, they understand the different classifications of crypto. They also understand that each crypto token has its own specific use case. The fact that there are different blockchains. Before it was just Bitcoin was crypto to everyone, and they did not understand anything else. Today, a lot of investors understand that there are thousands of cryptos out there, and each has specific use cases. So I think there's been this rapid growth in the understanding and the differentiation between different cryptocurrencies have become more apparent to the people who are investing. So that education amongst people in India has rapidly increased in 2020 and 2021, I would say.
Charles, would you say that there is enough place for all the blockchains? Is there competition between layer one and the latest upgrades which work faster and are better and cheaper?
Well, there's always consolidation after a Cambrian explosion. There's a Cambrian explosion and extinction when you look at different blockchains or any technology for that matter. For example, when the internet first came around, there were a lot of web browsers, there was a lot of search engines, and then obviously consumers start creating preferences, and sometimes those preferences are quite sticky. For example, like Google, and other times those preferences fade. For example, like Netscape or Internet Explorer or other browser infrastructure. So it's hard to know if cryptos are going to be like search protocols or are they going to be like web browsers in respect of their level of stickiness in the marketplace. That said, the world's a very big place. There are many different philosophies. There are many different regulatory standards. And in some cases, these are fundamentally incompatible with each other. For example, the People's Bank of China wants to issue a digital currency. Whatever that ends up being will be fundamentally incompatible with the ethos of things like Bitcoin. So given that they're very different in that respect, they're probably going to coexist as opposed to one dominate the other. And I think there's well more than enough room for at least 12 to 20 good blockchain projects that have differentiations on the governance side, the regulatory side, as well as use and utility. Where it gets much more exciting are the applications built on top of cryptocurrencies. And so when we look at the DeFi space, for example, that was very small last year, and now it's $100 billion space this year, and it's growing rapidly. And so there's going to be all kinds of competition and migration. And DeFi protocols are just like web applications, or just like cell phone applications, in that they live on infrastructure. If you're a cell phone application provider, you're not really loyal to Amazon or Rackspace or Azure or any of these other providers. You just basically look at it as a cost center. And so whichever one gives you the highest quality service for the lowest possible cost, that sweet spot. So I think there's going to be a great commoditization that occurs where there's a normalization of transaction fees, data costs, network costs, and other such things inside these systems. And I also do believe that we're going to see a fierce competition and a lot of innovation and destruction at the layer 2 and the DApp level in the industry. So it's less about who's going to win, and it's more about how do we commoditize, how do we make things interoperable, and almost how can our industry find its Wi-Fi moment where everything just kind of works, everything can kind of talk to each other, and it doesn't matter if it's a Samsung thing or an Apple thing or a Google thing. Equivalently, it doesn't matter if it's an Ethereum thing, a Cardano thing, an EOS thing. Things just seem to work together, and you can move value, information, and users between the different systems.
Charles, also as we see more acceptance from institutions, corporates, countries even, is it still more about Bitcoin?
Well, yes and no. So if you're a regulated entity like a Fortune 500 or a bank or some financial institution, they tend to be very conservative in where they deploy capital. And Bitcoin seems to be a very safe harbor for capital deployment. There are a lot of open questions when you start looking at other pieces of infrastructure, especially infrastructure that has more use and utility and more complexity, because there are security and regulatory concerns that may keep a more conservative actor out of the marketplace. But yeah, Tesla is one of the largest companies in the world, and the CEO of Tesla is into Dogecoin. There's certainly been a lot of great adoption of Ethereum, and we're starting to see institutional play with Cardano. So that is an indication that we're headed to a diverse world. And what will likely happen is structured financial products will be constructed, and those financial products will be part of a Fortune 500 and governmental investment policy. So instead of taking direct ownership of a Bitcoin or ADA or Ether, it's likely that ETFs or something like them will form, and you'll have collections of things like the proof of stake coins or the proof of work coins, and people will basically invest along those lines through regulated financial products, as opposed to taking direct ownership of the tokens, which requires a litany of questions like custodial concerns and so forth. So that's just the great maturing. The other thing that's required is you need to have ratings agencies. So it's very important when you look at an asset of what is the rating of it? Is it A? Is it B? Is it C? How do you rate these types of things? And so we have ratings for bonds. We have ratings for debt. We have ratings, obviously, for securities. Well, we don't really have solid ratings agencies yet. There's been some attempts like Weiss and so forth in the cryptocurrency space, but those standards still do need to be figured out. So the absence of clarity and regulation and the absence of proper ratings agencies do make it difficult for more institutional play in the marketplace.
Nishil, I'm purely coming in from the investor point of view now, looking for return on investment. Are more investors now also looking at use case, environment concerns, scalability when they invest?
Um, Absolutely. In fact, I think in the outlook of investors has definitely broadened and expanded. Though even today, Bitcoin still remains like the first choice and probably the the highest traded token, irrespective of the progress that you're seeing in the space. So Bitcoin takes a large chunk of that. But after that, I think your other tokens, the altcoins, are picking up speed amongst the investors. They're looking into the specific use cases. They're looking into why a particular token is being created. And I think the the other most important thing for investors today is not just about um, the speculative nature of these tokens, but also around where do they go ahead and where do they end up. And the other important thing in investment ecosystem is where there's a lot of these groupism or tribalism that exists, where a set of people do not like a particular, let's say, there are people who do not like proof of work, and they want to only focus on proof of stake tokens. So they form their investment thesis based on that. Or there are those who believe that a multi-chain ecosystem will exist, so they want to diversify across various blockchains and blockchain protocols. So these new kind of theses are now emerging amongst investors. Um, Now that's one part. The other set of investors we're seeing is investors who, instead of researching on their own, they want to rely on influencers and people they closely follow online, including when Elon Musk talks about Dogecoin. People want to invest in that. So that's that set of investors who believe in the celebrities and influencers they follow, and they sort of their investment thesis seems to follow those of the people they follow online. um, Apart from that, I think the new way for people to invest, what's also now apart from tokens, is NFTs. A lot of people are now getting into NFTs, especially in India as well, that we're seeing, where it's again more largely driven by either uh, the objective is that let's buy NFTs belonging to some of these early influencers who, as the ecosystem grows, they'll get more popular, and then these NFTs get more valuable. Versus there are also people who want to buy NFTs with various different objectives. Like the other day, I was talking to someone, and they wanted to collect NFTs to eventually create a virtual art gallery and probably charge people for having a look at all of these NFTs. Now, there are wild ideas and reasons why people are investing in crypto, but overall, I think the the diversification of investments is really taken up pace, and it's going in a really good direction, I would say, in terms of diversification.
Okay, let's keep it with the monies then. And Charles, a lot of money has flowed into this segment, and too soon, producing crypto billionaires, unicorns. What is the way to calculate evaluation for many of these companies, blockchains, technologies?
I don't think we're good at calculating valuations in anything involving technology. I mean, we had unrealistic valuations in the 1990s with the dot-com boom and bust. There were certainly the social media valuations that came through, and those were some realistic, some unrealistic. And so anytime you have emerging technology, especially technology that we know is going to impact everybody and touch everybody, people know there's value there, and they tend to overestimate that value for the short term and then underestimate the value in the long term. So there tends to be a boom and a bust and a contraction. What's unique about crypto is I've personally been through 5 boom and bust cycles. So I've witnessed it go from 50-cent Bitcoin all the way up to $30, down to $4, down up to $256, down to 80, up to 120, down to $250, up to 20,000, then down to 4,000, then well beyond 60,000. And now it's about 40,000. So it's really hard to know, like what is real, what's not real. And so value usually comes from people. If you have the capacity to bring millions to billions of people together and pull in their attention and their economic life and how they do business and how they interact with each other, then that believe is probably there to stay and durable. And you can always find ways to build business models to extract value out of those relationships in a way that would justify the valuations that are seen. But it's the Wild West in that respect. And I'm as much guessing as anybody else. There's been things that have surprised the hell out of me. For example, I can't for the life of me understand the rise of Doge and how it was able to achieve such gargantuan valuations, given the fact that it's, for all intents and purposes, a dead project. So the value is not connected to the technology and utility. In that particular case, it was certainly connected to the people. And that's probably a endemic concern throughout the industry. But this is the early days, and as things stabilize a bit, as consolidation occurs, as standards occur, then we tend to see more normal ways of valuing things that are connected to lifetime value per customer, churn rates, customer acquisition cost, and so forth. And then those are calculations that can be done by network effect and size and scale. What makes crypto unique is that we actually redefine value as well. So we create stable coins, for example, in our industry. So it's kind of funny when we price things in dollars and say this is worth X billion dollars or something like that, when you literally can create a different kind of dollar, and then nation states can adopt that. For example, El Salvador with Bitcoin, and there's a very good possibility that they'll probably do some form of digital stablecoin at some juncture. So given that that's underway, there seems to be something meta occurring in the cryptocurrency space that goes well more than beyond what you would in a normal startup ecosystem. Combine that with the loose monetary policy that we've seen from the Federal Reserve, the European banks, and the People's Bank of China, where they've been very comfortable printing trillions of dollars and then duly asserting that that's okay to do while inflation is not occurring, whereas it is. That's a problem. And it's something that people are starting to wake up to. And so we are seeing a mass exodus of consumer wealth from traditional fiat currencies into cryptocurrencies, if anything, to be a protection against inflation. And traditionally, instruments like gold have served that role, but actually gold's returns have been relatively stagnant over the last 10 years. So that's an indication that there's not a grand drift of consumer money into gold. However, there certainly is with crypto assets. And the other thing is that the young tend to purchase crypto assets overwhelmingly more so than traditional securities, stocks, bonds, these types of things. For example, there's been many surveys that show people under the age of 25 are multiples time more likely to own a cryptocurrency than to own a stock like Microsoft stock or IBM stock or something like that. So if that trend continues, the exodus of money from the fiat world into the crypto world, and the fact that the young are overwhelmingly in support of this paradigm, then I think the valuations could be actually justified in that respect alone, because effectively it's becoming a replacement for the world financial system, not just a novelty.
Okay, that's a lot of money talk, and let's move on to the decentralized finance part of this conversation. Now, Initial, this one is to you. Yes, it has been a big disruption. Are we still, though, in a disruption phase, or do you see, or have we moved into penetration part of it?
I think the one of the stats that you could look at and probably guess whether we are in the penetration or the disruption is to see how much of the market is already into this sector. And today there are probably a rough estimate is 120 to 130 million people on the internet who are into crypto. Now that's less than 3% of the global crypto population, which is about 4.7 billion people on the internet. So I would say it's still early days. While in isolation, the number 120, 130 million people in crypto looks large, but in the grand scheme of things, it's still very early. And so we are definitely in the disruption phase. Uh, that's one metric. The second is the fact that the markets are still highly inefficient in terms of the way it operates, the way people get access to these crypto tokens, and then the regulatory environment that's still very new, and most nations do not even know whether they or do they even regulate this sector. Most people are still confused about the various classifications of crypto. So that again is a sign of the disruptive phase. I think it's going to take at least 3 to 4 or maybe more years before we hit the penetration phase. And that's probably when maybe 10% of the internet, that's about the day crypto reaches 400 to 500 million people globally. I guess that would be the time when we would be entering the penetration phase. And that would be enough time for the ecosystem to build some really mature products that um, at hyperscaling that would be used by everyone who enters the ecosystem. Today it's still early, and though this is that moment for all of us to be early adopters, to be early movers. So this disruption phase is always the most exciting, I think.
All right. Charles, I was reading a quote from you that says that DeFi needs to have its Wi-Fi moment. What does that mean? How soon can we see that, and how will we get there?
Yeah. So Wi-Fi moment, basically, it's a good analogy to conceptualize the power of interoperability. So Wi-Fi is one of those rare technologies that you can be in India, China, Russia, the United States, Israel, Iran, Germany, France, the UK, Senegal, and you have the same phone and you're in different hotels, and yet somehow your phone can connect to the Wi-Fi in the lobby. So that's really a magical piece of interoperability because collectively those countries agree on nothing. In some cases, they're geopolitical enemies. Yet the technologies that they use are so standardized in a certain respect that as you move between them, you can have a standard form of experience that did not require government coordination or regulation to achieve. Well, that's effectively what we're looking for with the cryptocurrency space. So right now, there are many different standards. There's over 8,000 blockchains, and each of these blockchains, they have different ways of processing transactions. They have different ways of handling the movement of data. They have different metadata standards, different serialization formats. And as a consequence of these differences, it makes it difficult to move value, information, and people between different systems. So a Wi-Fi moment would mean that there's standardization in the industry such that if you're a Bitcoin user, you can interact with Ethereum smart contracts or Cardano smart contracts. Or if you're a Cardano user, you can interact with Polkadot or Algorand, and you don't have to really trust anyone. There's just standards and bridges that exist, and there's clear models of how those are secured. Now, in terms of the work we're doing in Africa and other places and its portability to India, we really wanted to expand into India early on. In fact, one of the former board members of the Cardano Foundation, Manmeet Singh, was born in India and has a long entrepreneurial history there and has done several projects there. The challenge we've always had is there's never been regulatory clarity in India about what exactly is lawful and what's not lawful, which I think has ultimately hurt an industry that otherwise would be very promising for our entire space. We worry a lot about remittances. India is the #1 remittance country in the world. We worry a lot about digital identity. India is rolling out the world's largest digital identity system for over 1 billion people. And India is also a mass manufacturer of many goods and services, which traditionally do require complex supply chain attestation. For example, India is one of the world's largest manufacturers of vaccines. It would have been invaluable to have a blockchain-based solution there. There's also a phenomenal ICT market in India and phenomenal universities like IIT in India, which we would have loved to have collaborated with. The only reason we didn't pursue these relationships as a company, IOG, was because it wasn't clear whether cryptocurrencies were lawful or not. And we could never get clear answers about that from the Indian government and from news that we had read abroad. Now, that said, Cardano's global infrastructure, it's permissionless, and it does not require a custodian or an actor to evangelize and push. And we have noticed that there's a great Cardano Indian community that's formed that's quite entrepreneurial, and Indian stake pool operators and so forth. So we feel that that community is only going to continue to grow. And we think that there's going to be a lot of phenomenal adoption in the coming years that are ground up, bottom up, done by entrepreneurs who live in India, who are from India, to get that population into the fold. That said, we're always happy to collaborate. And if the regulatory reality gets a little bit more clear, which I hope it will, then we would definitely consider entering the market, given that it's a seventh of the entire population of the world. It's not a market that one can ignore. It's a very important market and one that we do care about very deeply.
All right, gentlemen. So let's conclude this with forward-looking statements from both of you. And Charles, you go first. In an era where we are looking at corporate adoption of blockchain, tokenization, fractional ownership, where are we really headed in concept of all of these?
Liquidity primarily. So there's tons of small to medium-sized enterprises in Africa, India, and other places that are tremendously investable, and yet because they can't get to a scale to get access to markets to do that, and there's not a great VC ecosystem in these areas, the issue is that they just can't get liquidity. So that's a huge barrier to growth and social mobility. When you can tokenize things, even small scale things, then it actually gives you the ability to raise money at any tier, whether that be the 6 figures, the 7 figures, the 8 figures, the 9 figures, and so forth. And it allows people to take ownership in these ventures at a much earlier stage, while potentially still having reasonable risk levels. So all things considered, I'm very optimistic that these tools will continue to be used because they're already being used to surprising degrees of effectiveness, starting with the ICO revolution, the STO, fractional ownership of NFTs, all kinds of very creative schemes that people have come up with. Some are, of course, hazardous in default, but the majority actually have produced some novelties that have grown into real ecosystems. So given those tools are democratic, they're open source, they're permission free, and ultimately global, they're as just applicable to an Indian entrepreneur as they are to a Silicon Valley entrepreneur. In fact, if not more so. The primary value is liquidity, in my view, for the tokenization, and the fact that these are unified global markets that never shut off. That's quite a bit of liquidity, and eventually these markets will have tens of trillions of dollars of value in them.
Nishil, final comments from you as well. So, forward-looking statement on NFTs, blockchain gaming, smart contracts, and decentralized exchanges. Where are we headed?
I think at least in NFTs and gaming, we're seeing a tremendous interest from people in India, and the combination of gaming and NFTs is something that has really given a boost to the whole gaming sector. Um, Previously, games were seen as just something that you play and then you forget. Here now with the entry of NFTs, you can also see this as an earning opportunity, and a lot of people have now started looking at these games not just from a leisure activity, but also as a way and a means to earn money. And that's making it very, very attractive to people in India, especially those in the 22 to 28-year-old. They're taking to these blockchain games really quickly, and they're learning fast, and their learning curve is lower for people who are younger, and they love this whole new combination of NFTs and games. In terms of the decentralized exchanges, in fact, we at WazirX, we are in the process of launching a decentralized exchange. Um, what we've seen is that as the crypto ecosystem in India is growing, the demand for decentralized products has been increasing. So in 2017, 2018, you wouldn't have seen a demand or even a request from people, from the customers for decentralized products. But this year, we've been seeing an amazing number of our customers asking for decentralized exchange, which led us to build that. Even our NFT platform that we launched about 3 months ago, we instead of launching a centralized platform, we first launched a decentralized NFT platform. This was again purely from the demand that we've been seeing. What is happening is the last 2 to 3 years, people have been into crypto, they've been learning, they've been understanding, and now they want to sort of graduate from centralized products and services to trying decentralized products. And that's where your decentralized exchanges and decentralized marketplaces are playing a really important role. So it's sort of, the industry is maturing in terms of the need for more decentralized products. And that's a really positive sign. So we're all excited about the next phase of product building in India, which is going to be a lot of decentralized products are going to emerge.
And with those forward-looking statements and expectations, thank you so much, Charles and Nishal, for your time and insights. That was a fun conversation and insightful as well. But with that, we will move on and we will get to our panel, the Global Crypto Stage.
WazirX presents CNBC TV 18, the Indian Crypto Summit 2021. WazirX presents CNBC TV 18, the Indian Crypto Summit 2021.
We welcome you all, and the topic of discussion for this panel is the global crypto stage. And there is just so much happening in the global markets when you look at crypto and the blockchain technology. There are new updates, there is new scalability, new products, and new innovations as well. To talk about that and more, we are now joined by Siddharth Menon, who is co-founder, COO WazirX. Saeed Aldarmaki is MD, Alphabet Digital Currency Fund. We have Charles D. Hassi, who is MD, Consensus APAC Region. And Rajiv Mantri is MD, Navam Capital. Thank you, gentlemen, so much yet again. And let me begin with the crypto price volatility itself, because that clearly seems to be making a lot of headlines. Charles, I'll start with you first. What do you think about the moves that the currencies have been making, the volatility that there is? Is that about the interest? Is it about a tweet somewhere? Is it about scalability, use cases? What is it that investors watch out for when they are investing in a cryptocurrency?
There is many ways and many reasons investors are looking at cryptocurrencies. What we've seen over the year of 2021 is essentially an increase, a 2x on the number of users on digital currencies globally, from 100 million to 200 million at the beginning of June. And the reason for volatility are really various depending on the time of the year and the type of investment. What we see in emerging countries is the increasing use of digital currencies to protect from inflation. As we know, COVID has impacted a lot of our economies. Inflation is rampant, and that's one way for many people to send money across border, but also protect their saving, hopefully using cryptocurrencies. In the European and US market, we see a very large number of institutionals coming into the market, and they will kind of express opinions on those markets and makes the currency volatile. We have to remember it's very experimental, so people should be really studying these topics with care and not going for unfair dreams on this.
Charles, that point is well taken. Said, let me come to you now. And when one goes out to buy a cryptocurrency, there are just so many conversations out there, whether it has been about environment, what is the kind of company there is, what is the white paper that they have put out. There are a lot of debates. Do you think people who go out and buy cryptocurrencies understand all these things? Do they do research when they put money in, when they're investing here?
Thinking of investing in cryptocurrencies or trading cryptocurrencies needs to be aware that it's extremely high risk asset class. It's a very new upcoming technology that's still very much nascent and developing over time. So there's always going to be speculation in the market. I think as time goes by and as the market cap of all these cryptocurrencies that are in the market starts going up, then you're going to slowly start seeing the volatility decrease over time. But I think just as much as it's high risk, there's also high potential returns there. But I think if you do your research properly and care and exercise and due diligence, then most likely than not, and if you have a long time frame for investment, then you should be able to make some good returns. But I think you have to be very careful and you have to be very much aware that there's going to be a lot of risk involved in the market.
Rajiv, what is your sense in the buying pattern? For the longest time, it has been about Bitcoin, and then people started buying Ethereum as they understood the use cases there, and then came around the other altcoins and stable coins. Clearly, Saeed did say that there is research that is going in. People do understand in what they're buying right now, but what is the kind of holdings that you see globally and in India as well? What is the kind of categorization and the maximum money being put in?
So obviously Ethereum has done very well over the last year and a half. But the principal challenge from a more fundamental point of view with digital assets, with crypto assets, is that how do you categorize these? So are they capital assets? Are they consumable assets like conventional commodities? Or should they be viewed as a store of value? So each investor sort of looks at it in a different way. And I think that contributes to the volatility as well as, the rise and fall or the kind of traction that some crypto assets seem to get over others.
Okay, let's try and get in some numbers as well. And Siddharth, this question is to you. When we talk about Indian participation, I mean, you have a platform, there's an exchange. You do understand and see on what kind of participation are we seeing across board in various cryptocurrencies. Has the pattern changed? Are people going in for cheaper currencies or better currencies?
Absolutely. I think we started in 2018 and I was in the whole 2017. I've been in the whole crypto space since 2013. And the biggest difference that I've seen is, from 2017 is, the community was really small. The whole crypto community was very small. People did not know about it. It was like a taboo and everything around it. Now, since last 1 year, people are creating more awareness about what's going to happen, what's being built around, and I see a lot more entrepreneurial projects coming from India. And that's something very commendable, because India was in the whole space where we were not sure whether India will be participating in the whole next big revolution that's happening around. But good to see that India is making a big forefront in terms of the kind of talent that people are putting together in this project. And coming to the investor point of view, right, it's far much better than how it was in 2017. People are much more aware about it. Youngsters are more reading about what is risk and what is risk reward, how to invest. And I think these are programs like these where they get a more awareness about how to get into it, right, rather than just blindly go into it. And I think this is where the future is completely bright, and I really hope that India sort of participate in this next big thing. We missed out on the .com boom, and I hope that our entrepreneurs, our folks in India are able to participate in this.
Okay. So Charles, if you were to advise on what factors and fundamentals should people be watching out for before they start buying a cryptocurrency, what would all that be?
I think the beauty of the technology is that you can get access to so much data. So to come to your questions, you can read all the level of activities. You can read the number of users on each of the blockchain you might be considering for investing. And if you look at Ethereum today, there is millions of transactions every day. There is thousands of decentralized applications or dApps being used. There is mobile gaming. The central banks are building central bank digital currencies on Ethereum as well. So try to look at data points to really build a clear picture and get away from a sentiment, but much more getting closer to building an opinion on all these data points. And again, the beauty of this new generation of internet, that is the internet of blockchains, give you access to all this data. So look at number of transactions, look at value of transactions, number of users. There is multiple data points for you to kind of craft an opinion.
Okay, that's all about the cryptocurrencies, how you choose them and watch out for the volatility. Let's jump on then and talk about decentralized finance, which Charles also mentioned. Saeed, this one is to you. What's your sense on the kind of interest? Yes, that has been there for the DeFis, but what is the kind of growth potential that we have seen?
Yeah, so I think the last year has seen an explosion in the number of decentralized finance products and services that have been coming out. And these are actually disrupting traditional financial products and services that are built on legacy systems and that have been, shown to have inefficiencies over time. And now these innovative and new ideas that are coming out with decentralized finance applications and products and services are definitely, very, very popular in the market right now, in the retail market. But I think in terms of comparing against traditional assets, I think if you look at all the traditional assets out there, and from my background in Abu Dhabi Investment Authority, I'm very familiar with all the traditional asset classes out there, and they're all somehow one way or another linked to the central banks and to the monetary system. So they're all pretty much correlated to each other. But when you look at Bitcoin, for example, and cryptocurrencies, you can see that they're not attached to any central bank policy or any government regulation, etc. So in that sense, it's not a correlated asset class to other traditional assets. So I think in terms of purely diversification purposes, I think as an investor who's smart and intelligent, it just, as soon as you see that, that it's not correlated to your other assets that are in your portfolio. So I think it's always very prudent to have 1 to 5% of your portfolio in an asset class which is, not linked to the other traditional asset classes. And then, like Charles pointed out, with inflation being rampant and money printing, especially with COVID over the last couple of years, it's you have to take risk to actually beat the inflation rate. Everything, the stock market prices are going up because of money printing. So you need a hedge against inflation, and I think cryptocurrencies is one way to hedge against that.
Charles, you mentioned Asia, and while yes, we are the top buyers in case of cryptocurrency, the adoption rate is quite high here. What is your sense on the overall businesses when we look at Asian markets? Is it actually exploding across? Buying cryptocurrencies is one part of it, but when you look at the DeFi pool, when you look at the investments, when you look at the expertise, where does Asia stand there?
Absolutely. The first use case we've seen on blockchain was back in 2017 around the funding project and the era of ICOs. And 2021 and the coming years are really showing the very fast growth of DeFi. There is today $82 billion of assets under management in DeFi, and we see really a blossoming wave of innovation from many different projects. Within DeFi, you find different kind of services. You will find in the traditional finance as well. So you've got borrowing and lending services. Some of these services host more than $20 billion of borrowing and lending activities. You've got also decentralized exchanges, DEXs, derivatives. So a whole new finance with a very high degree of automation is being built right now in DeFi. And when you see, as was mentioned earlier, the pace of inflation all over the world, especially here in Asia, it really makes sense for many users to start to experiment a little bit this DeFi and see how things are growing. One of the gateway to DeFi is a product from Consensus called MetaMask. MetaMask has been growing tremendously over the past months. Last year, in September, we had about 1 million users. This year in September, we've got about 11 million users. So it's a 10x growth. And it really shows also the growth of Asia, as you were mentioning earlier. Today, the most active countries for MetaMask are based out of Asia. India is within this top 6 of players. So it really shows how the mobile-led finance is growing, and how the investors and users are looking beyond digital finance, but really looking at a new value proposition of finance. And all the innovation we are witnessing in DeFi are really resonating, and it shows through the numbers. For example, with the numbers of DeFi assets which are under management right now. And maybe one last point, we see also the asset kind of progressing within the ecosystem. So some users will decide to do lending of their crypto asset to receive monthly interest. Ethereum is migrating to proof of stake, and investors will be able to get yields and fees out of staking of their ETHs and Ethereum tokens. So there is a whole new ecosystem unveiling before our eyes, and it's a very exciting time.
All right, take a step ahead then. And Siddharth, when we talk about centralized exchanges, and now we're talking about decentralized exchanges as well, would you say that in India as well, we've taken that step forward?
Yeah, I think centralized exchange plays a very important role to sort of bring in a lot more adoption into the whole crypto space. It's sort of like the gateway right there for a lot of people to even to use a product like say Ethereum or D apps. You need Ethereum, right? So, and that's what centralized exchanges do. They just give you access to these projects and where you can easily buy and do this. Now, it doesn't just stop there, right? Like even as in India, when India is coming on to adoption of the whole crypto, what they need is an ecosystem. And that's where the whole decentralized exchange also comes in play. It's primarily for them to be in the blockchain space and be able to swap their tokens between different products, different projects. Like for example, if you are using 2 different projects and you want to swap that and use another one, you don't need to come back to a centralized exchange. You can just do that within that ecosystem and start using those products. So there's a lot more than what we just see in the eyes, right? Like it's just not just an exchange, but it's more for the usability of these products. And now we are seeing a lot more projects that has been sort of baking this whole DEX exchanges right below that, such that from a user point of view, when they do an interaction with a with that app, with a decentralized app, at the background, what happens is the project, sorry, the tokens get swapped with different things, and that gets paid to pay gas or any other thing that needs to be done to actually execute your decentralized app. And it's completely amazing, right? Like so these are like the foundation infrastructure for something like this. And that's where we are also coming in. We believe in the growth of the whole ecosystem, and these are like basic building blocks for anybody to adopt from the traditional market to just tokens to actually in the blockchain space. And that also goes with NFT and everything else.
Rajiv, the conversation clearly about 2021 has been that there is perhaps a possibility that 2021 could be a year where we will see the centralized exchanges and decentralized exchanges, or CeFi and DeFi, coexist.
So I think in India, obviously the regulatory bias is always towards protection of investors, towards going conservatively in the area of the financial services space, and it'll be no different with crypto as well. And let's see how the regulation evolves. Till date, we don't know, right? So for DeFi to really take off, first we need clarity on the status of crypto in India. So I was encouraged to see the finance minister's statement. I think it was yesterday or day before that we can't shut the door on futuristic technologies. So I guess the government and the regulators have to somewhere balance that with the conventional approach that we've always had towards protection of small investors and not getting sort of too experimental when it comes to things like taking deposits or even sort of trading access for, let's say, non-qualified investors in certain asset classes. So we'll have to see how that balances out. But there is a case that DeFi has a lot of potential to sort of expand financial access in the country. Already there's been lots of stuff going on around that, with the account aggregator framework and other kinds of initiatives to improve credit access in particular. But I think India has long ways to go for financial access, and this new technology can be one of the contributors for that.
Well, yes, that is all the products that the markets are now looking at. But Siddharth, even as there are no new products coming in, there are more participants joining in as well. And that is showcased by your platform, various other platforms in India. Is regulatory clarity something that there are a lot of people still watching from the sidelines? Once that comes, the participation perhaps would be manyfold from here.
Yes, it's a journey for us right now, and we always believe that regulation always follows innovation, and that's a very important part, right? It's not just true for only the DeFi or the crypto market, but also it has been proved for the drone market or many other things that has happened, not just the finance market. So that doesn't stop innovation. That doesn't mean that we have to stop on innovation. Innovation has to happen, and especially because there's so much unknown, we have to explore that. And by then the regulation catches onto this the evolution that is happening. We have enough data to even discuss about what are the pros and cons about these things. So I think that's what we believe in. And when it comes to discussing with people from the regulative folks, we are being more about creating awareness rather than trying to move things on left or right. We're trying to as and when we learn, we are able to collate that together and bring in a lot more awareness for them, especially around things like the biggest problem was classification of crypto, whether it should be classified as asset, whether it should be classified as currency. These things have also evolved in last 2 years, just in 2 years. And by then the government is able to understand that we are already in the next phase, right? So it's very difficult, but we do our best to make this happen, not just at a regulatory level, even at cybersecurity and many other places. We actually host a lot of events to teach people how blockchain works, to tell them how to trace things, how to figure out things, and just to rather than becoming an unknown and rather than completely closing the door, it's more important to create more awareness for them. And that's a lot of program that we've been running within WazirX for everybody else.
So when we talk about overall cryptocurrencies and blockchain, the first chapter that we read really is about that it's going to be cross-border, that it will happen in fraction of minutes, that it is cheaper. How many of these boxes have really been ticked, Rajiv?
So I think from a technology standpoint, many of these boxes are ticked. But ultimately, adoption and wider use will be constrained by the regulatory climate, right? So many people may stay away until they know what is going to happen with this in India. How is this going to be taxed? how is the government going to treat it on the balance sheet of an individual or a firm? If at all they're going to permit it, all these questions are still hanging. So from India's perspective, that remains a bottleneck, I feel, to wider adoption. And from a technology perspective, if you follow the way things are moving, we are seeing many of these applications come to the fore. And interestingly, at the same time, I would also point out what is happening is that legacy systems are also responding. So in a way, crypto and digital assets are forcing legacy systems to also up their game, which is actually very interesting.
All right. So I'm going to take a step ahead from here on. And this question is to you, Charles. How would you read into the adoption of crypto, whether it is by individuals, institutions, businesses, etc.?
What we see is very interesting. We went through a kind of a discovery phase of crypto and cryptocurrencies, and I think now the governments, the enterprise, are making a clear distinction between cryptocurrencies and blockchain technologies. And there is a massive wave of innovation right now happening at the central bank level on what we call central bank digital currencies. I know this is a very hot topic in India as well, but as per today, there is about 80% of central banks which are experimenting on implementing blockchain technology to essentially distribute and make their currencies much more veloce within their ecosystem. And it's probably one way where we're going to see start to see a bridge between cryptocurrencies and blockchain, and maybe some of our national currencies will be sitting and moving on blockchain technology. And if you think about the potential impact of CBDCs on the overall value chain of finance, when your central bank, which is the original of money within the financial system, start to use blockchain to distribute a new generation of money, it will have impact for everyone. From the commercial banks to the brokers, to the payment industry. So this can have really a lot of impact. So we really invite everyone to be involved in all the experimentations and conversations. We see a lot of activity in China, obviously, where there is already 50 million users of the Chinese eCNY. A lot of activity here in Hong Kong. With Consensus, we are building the multiple CBDC bridge, bringing together the central banks of Thailand, UAE, China, and Hong Kong. But there is also a lot of activities in Singapore, in Korea, and I think we have a chance here in this part of the world to have to be shamelessly leapfrogging and leaving behind some of the legacy system to make sure we remain competitive and relevant into our digital societies. So a lot of activities and some newcomers into these conversations around blockchain, such as governments and central banks, which can be very impactful.
So while there is a lot of first mover advantage here, Saeed, but would you say that, moving on from buying a crypto, making it an investment, adopting the technology, the next big thing perhaps is the crypto banking that seems to be picking up, whether it's about crypto lending or borrowing. This is about people who hold cryptos. How is that catching up?
Yeah, I think you're starting to see a lot of competition, especially in the banking sector. I think you're starting to see a lot of digital banks coming out and becoming competitive and actually, embracing cryptocurrencies and allowing their users to have digital wallets and to be able to load their digital wallets with cryptocurrencies. But I think, all the, if you look at Visa, MasterCard, all of these, payment processors or payment rails, they've all said they're exploring cryptocurrencies and they want to, utilize cryptocurrencies. But I think, in the next 3 to 6 months, I wouldn't be very surprised if, like about 12 months ago, there was MicroStrategy, which put in a very significant amount of money into Bitcoin. But I think over the next 3 to 6 months, I wouldn't be very surprised if you hear the name of like perhaps Google or Amazon or one of these huge, corporations actually say, okay, we're going to actually put some of our treasury reserves into Bitcoin, and that will just be a huge catalyst. And I think, there's always going to be a growth in the market in cryptocurrencies, and I can only see the market cap growing over time because I think the monetary system has been flawed for many years, and it's just, the rate of decline of the fiat system and inflation is just rapidly, increasing, and I think cryptocurrencies will be there to take the slack.
Well, just as the conversation seems to be heating up on what's happening on the global crypto stage, we have a question coming in from the participants as well. And this one is for you, Siddharth. In the light of blockchain technology, what is your sense on what is the future of the financial systems?
The very important revolution that is happening in the finance system is the transparency and trust that is getting more public. Before, it was all the closed loop system in the financial past, right? You have the banks which had, you do not know the balance of how much the money the bank has, or the RBI or Reserve Banks, how much where the funds are and how it is distributed. Now we are thinking about CBDC, a centralized token, which will actually enable a lot more transparency in the whole financial system. And that by itself opens a lot more opportunity, and it's completely redefining a lot more things around how the lending and borrowing market happens, and many other instruments that's built on top of it. So if you just understand and you just sit back and you realize that we are all in that whole process of digitizing, right? We're going into, social became digitized, and now we are talking about money getting more digitalized. We are just starting the evolution that is happening. And to me, I think I'm very bullish about where this could go. Maybe in a short term, if you're looking at the markets, it can go up and down, and markets are always very sentiment based and based on many other things. But in the long run, in a 3 to 4 or 5 years from now, I think this is just getting started, and there's a long way to go. We are just solving basic things. And if you realize, in 2017, it was the retailers who were coming on board. This year, we are talking about institutes coming on board. But in the DeFi world, it's still the retailers that is still playing around, trying to experiment, doing things, playing around, maybe, trying to realize how it works. But ultimately, you'll have the institutes also coming on board. So it's just getting started, and I'm very, very excited about, where this is going to go.
We have yet another question coming in from the participants, and this one is to you, Rajiv, on what is the next step now on the global crypto stage? What is it that you would want to watch out for?
So I think pretty much all major central banks have said that they will also sort of issue digital currencies, right? So the CBDC, central bank digital currencies, are coming, including in India, and that has, I think, enormous repercussions for the entire banking industry here. Because what is a bank? You get a license from RBI to sort of be a bank. And if the RBI issues CBDCs, if it issues a CBDC, then you are going to disintermediate the entire lending infrastructure in the country, because then the RBI can kind of directly deal with consumers, right? When it issues currency, so it doesn't need the banks. That's the kind of end game, I think, where this would all go. So that's a very big change from a kind of government-owned, government-dominated nationalized banking system with PSU banks and so on. We could be going towards a landscape where RBI and consumers are in a direct relationship. I know that sounds a little outlandish, but that is the end game, I feel. And on the other hand, I think much of what will come, especially in a place like India, will be determined by the regulatory stance that the government takes. So whether that's got to do with the taxation of crypto assets, the digital assets, or even the legality itself. So I think that's something to watch very closely. And opening up the space will enable wider participation in India. On the contrary, if there is an adverse stance taken by government, I think India will kind of fall behind in this new space.
And since we are making forward-looking statements here, another thing to watch out perhaps is going to be the CBDCs and regulations that I'm assuming is on the top of the list right now. Charles, what would you want to watch? And would you say that each country perhaps will have to watch onto their own CBDCs and their own regulations?
I think the right path is probably to define and give clarity to the industry. There is a lot of very talented entrepreneurs which are just begging for clarity from the regulator. So depending what kind of regulators and where you are able to give clarity early on. And sometimes it takes more time. But what is for sure is the industry is really for clarity and hoping to comply with different rules, but with the right momentum. And when it comes to the momentum of regulations, I think it's important to think how how the regulators have to behave and protect their investors. So I would say a pattern which I've been seen in quite a few places is to kind of give access first to institutions and accredited investors and protecting the retail investors until the clarity from the regulations and the industry maturation is reached. But what is really demanded by the industry in general, should you be technologists such as us at Consensus or exchanges, or people involved in the crypto, is by giving us rules, we are happy to comply and help the ecosystem to grow and stay aligned with the domestic regulations.
Since we keep coming back to the decentralization of it all, Rajiv, how would you look at India's stand on the crypto DeFi map rather, and what kind of growth would you say that we have seen in the last couple of years, and where are we headed?
So I think India has done exceedingly well. If you look at Matic and Polygon and the kind of talent that is coming up over here, I think a lot of it is under the radar, and we are seeing some tremendous talent working in this area. And it bodes really well for India, and so we should try to sort of encourage that talent. We should try to sort of give them the space to build something. People always ask, what is this good for? Why allow this to happen? Well, it's the early stages of a novel technology, so we need to give some sort of time and space to technologists, engineers to play with this and develop something. Right. So I think it's been last 2 years have been like actually a coming out party almost, I would say, for India on the crypto stage. And if we give that space to our engineers and technologists, then I'm sure that you'll see some really significant applications also coming from India.
And there is yet another question coming in, and this is quite interesting. And this is for you, Siddharth. It says that we have seen a lot of job creation and job ads out there for crypto exchanges and tech-related jobs. What is the kind of pay available for these jobs?
Okay, I think especially for the market growing, like we were in January a small team, maybe a 30 people team, and now we are about close to 300 people team just in like not even a year. And this just us, but and probably a few more other exchanges. But there are also a lot of other projects who are actually very aggressively building onto the whole space, like what Rajiv said. Like we have the Matics and many other projects that's just under the radar. So we've been helping them out, creating this whole ecosystem where people don't have exposure to blockchain, and we are trying to build this talent out, right? Like these are like the right the people it's not just engineers, by the way. Like there are people who can write really well, can explain the technology to a lot more people really well, are also in demand in general. People who can actually be in the editorial space are also helping this out. People who are in the marketing space are also. So there's a lot of plethora of this industry that is just been built, which is not just led by engineers but everybody around that. And even to find the right talent is where the challenge is, and where we are trying to incubate that and to build that in the whole ecosystem. So from a job creation point of view, there's an immense possibility, right? It's just like when we think back, India was known for the whole tech growth, the IT growth. I think this is next big wave that is coming in, and all those guys who are going to be participating in this will be creating a lot more value for them in future.
All right, so that was all the details about the global crypto stage, on what really is happening there, what are the opportunities therein, and what work really is being done on that one. But moving on, we will talk about tokenization of the real world assets, on how that is being done, what are the opportunities there, and what is there to look forward to in sense of economy.
WazirX presents CNBC TV 18, the Indian Crypto Summit 2021. WazirX presents CNBC TV 18, the Indian Crypto Summit 2021.
Well, welcome to our brand new panel where we are talking about the tokenization of the world. And tokenization recently has acquired a lot of traction. It refers to the process of converting tangible and non-physical assets into blockchain tokens. NFTs have garnered a lot of interest, and industries like real estate, equities, artwork are gradually leaning on that space. Let's dwell deeper into that subject and understand the growth opportunities and how tokenization of the real world assets will revolutionize the world. Joining me on the panel is Nitin Gaur. He's MD, IBM Financial Sciences, IBM Research. Shailesh Lakhani is MD, Sequoia Capital. Siddharth Singhal is Director, Enterprise Parity Technologies. And we also have with us Nishal Shetty, who is CEO and co-founder of WazirX. Gentlemen, hi. Thank you so much for joining us. And even before we start talking about tokenization, well, we are looking at a lot of adoption around globe when it comes to crypto and technology. There are newer products and newer interests coming in. But Nishal, first up, how would you look at the China statement where they have reiterated banning yet again when it comes to transactions into that country? What is your sense on that? All right. While we wait for Nishal to join back, Nitin, would you want to take that on?
The biggest debate in the industry has been, do you control and regulate technology versus you control and regulate the instruments and the activities that surround it? And I think it's virtually impossible to control technology. And any claim in terms of having a transactional control on these systems is a futile sort of exercise. We've seen that with internet, we've seen that with data, we've seen that with firewalls and avenues where the population and the masses have tried to circumvent that whole problem. So I think in many cases, while the Chinese regime is trying to sort of get control and handle both in terms of transaction systems, payment systems, I think it would be in their best interest, in fact, it will be best interest of most countries to be able to fuel and understand the technology, embrace the potential, and begin to adapt to transform the financial services industry.
Shailesh, would you say that cryptocurrencies and trading of that is one part of it, but technology has just so much to offer? We're looking at DeFi, we're looking at NFTs, tokenization. There is this whole world opening up. And as Nitin said, it is in perhaps countries' its own best interest to be a part of this.
Yeah, crypto has such broad potential applications, and we have no idea where it could permeate, that banning it at this stage is perhaps shooting yourself in the foot as a leader of a nation state. That the amount of talent, the amount of interest, and the potential of this to reorder our lives, which are largely digital, is really, really immense. So for a country to let go of it at this stage, I don't know, there are certainly reasons. You do lose some control in the short term, and there are some institutions that typically govern some of the things that crypto does, sometimes better, like digital gold in the case of Bitcoin. But the future applications, like things like NFTs, probably was not on anyone mainstream's radar up until a few months ago. And that's just one set of applications. The number of other interesting applications in other areas like gaming or certainly in decentralized finance is quite significant. So we're working very closely with the Indian regulators to try to get them to take a very different stance, and so far they've been very receptive.
Fungible tokens here, and NFTs clearly seem to have garnered a lot of interest in the recent few months here. It has opened endless possibilities, and we've seen a huge amount of money crossing hands as well. People are buying NFTs worth millions and millions of dollars here. What is the industry looking like right now? And Siddharth, this question is to you. How would you look at the numbers globally and India as well?
Well, thank you for that question, Manisha. Polkadot is center of some of these actions, as historically different chains weren't able to talk to each other. Thanks to kind of our platform, the nature of how blockchain 3.0 is kind of unveiling. All these chains are slowly becoming interoperable, and we're seeing thousands of tokens being represented on our platform, and more to come. As in, it's it's incredible to see the interoperability, the forkless nature of like future-proof upgrading and on-chain, off-chain governance as well. NFTs, as you were mentioning, are representing not only just like traditional physical and digital assets or traditional registered securities, but they're also representing every brand, community, artists, which can essentially tokenize their entire economies on-chain. So it's exciting.
It sure is. Nishal, you're back with us. And, I was reading a statement from Ernst & Young with a survey and a report that they did. And they said that the traditional financial assets are going to be wrapped, tokenized, and made programmable going forward. I mean, the safety, the security, the simplicity that it offers is quite huge. How would you elaborate or explain on this? Nishal, I actually can't hear you. Looks like you'll have to perhaps rejoin yet again. Nitin, I'll put that question to you. There is just so much that is being talked about when it comes to tokenization, and there are various agencies, global and Indian, which are doing various researches on this. How are you reading them all?
Yeah, so here's an interesting part. I think that the promise of blockchain-based business networks is not just digitization and solving the inefficiencies that's imposed by time delays and relay of trust, which induces opacity of information leading to fraud and like entities, but rather creating a new business model and co-creation from synergies of network participants that did not exist before. So this whole notion of synthetics that you talk about, to me, it defines instance economy. And I also believe that tokenization and its contributing attributes is essential to not only powering the next generation digital economy, and we've seen evolution of that, but also paving the way for new business models built upon instance economy. And I've used this term twice now in my one sentence, is that it fuels tokenization of assets, leading to ownership of instance of an asset, thereby creating large markets, secondary markets, and value that simply does not exist today. So I think the permeation, as Siddharth mentioned earlier on, is immense, and we are looking at truly global systems, and we have begun to see the emergence of that with synthetics and what Terra Labs has done, in this space.
And while we are talking about tokenization here, when it comes to NFTs, Sailesh, and I want to dwell deeper into that because NFTs, as we've mentioned, the numbers are quite huge onto this one. But what we really see on this is basically art and music as of now. Well, yes, there is a bit of a gold here, and real estate has seen its own presence in NFTs. How would you look at the categorization, the kind of increase that we've seen in sense of participation, and what other industries do you see onboarding this?
So the main industry that I see that I think has generated the most excitement or the most value has been digital avatars. Things like CryptoPunks or Bored Ape Yacht Club are some of the largest market cap NFT projects. And they're, I think, the ultimate status symbol. They're the ultimate luxury good. That in a world where we spend 12 plus hours a day online, buying a fancy suit or buying a luxury car, which a small fraction of the people that you might come across, meet in a day to demonstrate your status, that's just your real world status. But if I'm spending all my time online, why wouldn't I want to show my status online to the thousands of people that I might have come across every week or every month? That feels like a much larger use case for the showcase or the show-off economy. Certainly there's large art projects. Certainly there's music projects. There are obviously things in video. We see lots in collectibles around sports teams. We see many in sort of next generation loyalty or ticketing applications. But as someone else mentioned, that what we're really looking forward to is where people can use this type of technology in completely new ways. Without a direct analogy from what exists in the offline world or existing Web 2 models. So there's significant possibility here. NFTs, we think, are one of the first main technologies that will take crypto mainstream. In my opinion, I've said this publicly a few times before, I think DeFi is just very, very complicated for a standard consumer use case. And many aspects of crypto are just they're not easy to use. Some of the biggest applications of NFTs have been people who've made them quite easy to use, like the NBA has done with their Top Shots applications. So easy to use applications that rely on blockchain and can create a completely new use case are ones that we think will have broad consumer appeal.
Well, yes, we've seen a lot of use cases come in, and the markets are just about trying to understand this. I think as of now, the euphoria is all about the kind of music and artworks that we are seeing online. And you're right when you say that we haven't seen a mass adoption of this yet. I mean, this is a difficult subject, and people are just about trying to get or understand it right now. Siddharth, how would you look at the markets, the kind of numbers that we're looking at, and the potential for this? And when by do you think that we might be, looking at people, a mass adoption that could come into this space?
Thank you for that question. Well, Polkadot itself is in a little infancy stage right now. Later during this year, when the network is projected to go live, we are seeing a lot more activity, a lot more chains represented, a lot more tokens happening. But as you rightly said, like music and collectibles are just the scratch of the surface, right? Overall, if we look at NFTs as a percentage of the overall digital economy, it's still in the single percentages, and these are very early days. Comparing them to back into internet, it's like putting pet food or women's shoes online. But here we are talking about putting digital identities and money flows and digital currencies online and making them all programmable. So the bar is much higher. The trust factor required is much higher. And we are working very closely with the regulators in the space as well. We're excited to work with a lot of different artists who are essentially and like tribes essentially to bring their entire economies being digitally represented and making them programmable. So it's exciting.
Nitin, when you look at tokenization or when you look at NFTs for that matter, what is the benefit of that? I mean, if people were to start spending money onto this one, start accumulating them, onboard them, who's using it? Where is it used? What kind of benefits would one want to see?
Yeah, I would stress and agree with Salesh when he mentioned that NFTs will bring blockchain to mainstream. I think finance in general is complicated, and decentralized finance adds an additional layer of complexity on that. But we all love sports. We all love music. We all have our set of collectibles. As a cricketer, we all have our favorite teams, favorite players, and we spend enormous amount of money in their memorabilia. So I think from that perspective, you find a wider element from fan engagement, which is what we have seen with projects like Chili's and Socios, which is trying to engage that fan, element to say, you have these tokens that gives you right, which becomes sort of a manifestation of digital rights management to a certain stream of experiences that are to evolve. But I think from enterprise perspective, and I've worked on this about 4 years back, so NFTs are new and cool now, but we were looking at NFTs both, as Siddharth mentioned, in terms of knowing digital identity, which is, again, a tokenized form of who we are. It's unique. It's not exactly fungible. But then you're tying some of the elements of your credit history and some of your health records. So you're sort of bringing the notion of longitudinal health record, which gives enormous sort of advantage to the healthcare industry. And these are sort of enterprise use cases that can truly sort of take advantage of non-fungible tokens in its true form, in addition to leveraging them to say, can I then take NFTs and lend them to my insurance entities or to clinical trials and monetize it, which today we aren't able to monetize our own data. And that's the thinking that we have to bring to mind, that I can have a wallet and I can keep my football and my cricket sort of NFTs, as well as my healthcare record, that I can begin to use them in a fashion that's more suitable to me.
Now, your point is well taken. I want to move a step ahead and talk about fractionalized ownership as well. And this one is to you, Salesh. While we are talking NFTs, and I get your point when you make about fans spending, buying, and it's more of an excitement right now. But it's not just that. It will have to have a use case as we move ahead. We've seen expensive art on NFT, but gold, silver, real estate, especially gold, because that would always be a crowd favorite. How do you see that next step coming in here?
I think fractionalization is a really interesting concept. That some of these communities that, often, let's say there's 1,000 pieces of art or 10,000 pieces of art or avatars. The cost of some of these things, as you mentioned earlier, have gotten to millions of dollars. So they're inaccessible to probably thousands or hundreds of thousands of people or millions of people that may want to have self-ownership. And they're also representative of online communities. And so if more people want to join these communities, One way that you could do it is to fractionalize or share ownership of these assets. That's a way of exposing it to a broader set of folks. It's also a way of actually even driving up the cost of some of these. That fractionally owned assets theoretically should be more expensive. If there's more small players, more small buyers that make up the ownership of an asset, they could theoretically pay more than a single individual. So it's an important concept, I think, to just expand the community and potentially also continue price momentum for some of these assets. But it may not work in all types. Certain NFTs will represent, admission to a more exclusive club that cannot be physically expanded. We've seen NFTs that represent access to a party or represent access to a physical event, and that those won't be able to fractionalize. But it's an important concept. We see it's something that could have a lot of near-term momentum.
Nishal, I see you, and they say third time is a charm. So this is the third time I'm trying to ask you a question here. So, the World Economic Forum conducted a study that predicts that 10% of global GDP will be managed by blockchain infrastructure by 2027. How would you relate to that statement? And what kind of a role would you say that NFTs or DeFi would play on this?
I think I'm more bullish, though I think 10% is fine. If there's a target, but I think it'll be far greater eventually, because if you look at any innovation that comes up, it always beats all of the ones previously in terms of value creation. And the internet was a great example. All of the companies on top of that was a great example. And here we are talking about disrupting or reinventing or adding new layer on top of financial infrastructure completely. So it's a huge opportunity in front of everyone out here. In terms of, I think, NFTs and all of the innovation that we're seeing in this sector, it's the ownership taken to the next level. Digitally, we've never had the opportunity to own something, and NFTs are making that possible. And we're seeing a ton of new use cases emerge around this whole concept of ownership. It started with art, but now we are looking at, for example, fractionalization, where people are buying NFTs together. Now that's again showing us something greater, which is that a bunch of people unknown to each other can get together and have a financial interest in something. Never possible in the real world or never heard of before. And I think this is how the whole economic evolution is going to happen online, where things that were thought impossible before, we're going to see them happen in front of us. So I would say, it's hyper experimentation in the financial world, which has never happened before, that we are seeing right now.
As that was pointing earlier as well, that it's in infancy right now, and Nishal, a bit of a whim as well when you look at the way these NFTs are priced. So the fractional ownership, yes, will work, but when you look at the interoperability or the way, as you said, when you talk about fractional ownership, I'm assuming it's borderless and it's an open global audience here. How far are we from that? How soon do you see that happening? What role will regulatory play within this?
I think, before regulation, it's definitely going to take off even before regulations come in. And probably that's how crypto has operated. The innovation in crypto seems to happen first and then regulation, for obvious reasons, because these are unthought of. Whoever thought that, unknown people, not even real identities online, pseudo-anonymous people getting together to buy things. The other is DAO, a decentralized autonomous organization operating. Like there are now organizations getting together, unknown people pooling in money to invest in crypto projects. So I think this innovation is going to evolve faster than regulation. But eventually regulation is going to be important, though I don't think in the current form it's going to be any useful. You'll have to come up with a clean slate approach where, look at how it's happening, because a lot of regulations, for example, around the financial model has been specific to nations. And now suddenly you have people and businesses spanning across multiple nations. So how do you, I'm not even sure if one country can lay down regulations for a lot of these decentralized protocols and decentralized projects that are emerging, because they span across nations. So maybe a global financial law might happen someday, and that might be able to cover it. Otherwise, it's going to be really difficult.
Oh, yes, absolutely. And that's not just the only point, because we're looking at several platforms that have emerged to enable NFTs or fractionalization of NFTs for that matter. Siddharth, what is your sense? I mean, I know it's equal to buying shares in a stock market, but a country has 2 to 3 stock markets, perhaps. The way we're looking at platforms mushrooming around the world, how do you look at this market with that light?
Thanks for that question. So as I was mentioning earlier, like Polkadot is in itself as a platform or as a network connects various different blockchains. So we've seen 400, 500 plus platforms built on top of ours, and we try to connect them all via a single layer. So there is a explosion. We have 100 plus NFT teams building on top, and each one of them do have their own tokens and assets and avatars and economies of scale as well. So it's really exciting. We do work very closely with the regulators and enterprises as well. So as I think other panelists, Nitin and Shailesh were mentioning, like it's also airline miles being represented, right? It's another loyalty programs. Think of this as kind of the 2.0 of those economies which were being represented partially in the previous regime or previous what technology could have enabled, and now we are just rethinking a far more enabling all of them.
So, I want to take a jump ahead on this. And while, of course, as of now, the NFTs are bought because people want to, people are being FOMO'd out. People want to acquire it. People want to be part of this as well. But how soon, and this question is to you, Shailesh, you see before NFTs can be a part of a portfolio? Clearly, when we talk about fractionalization, it's about affordability. It's about entry at, lower the entry barrier for perhaps millennials or small traders or small buyers here. But how long before we see that as a part of a portfolio?
I think it should be part of a portfolio for certain folks already. If you have some exposure to crypto, this is perhaps the most exciting area of innovation within crypto, that you should look at it perhaps as soon as today. I think there's not been a lot of assets that really target Indians in terms of cultural sensibilities or in terms of things that might appeal to Indians. But I think that's going to change a lot in the next 12 or 18 months. That the number of companies we see that are starting to do things in this space are significant. But like art or movies or any form of content, there's going to be lots of stuff that doesn't amount to anything. There's millions of books published that very few people have read. There's lots of movies made that very few people have watched, and there's things that similarly there'll be lots of NFTs that won't have much value. Similar to the way that network effects or brand names form around very famous artists, whether it be a Hussein or a Picasso, that's what we expect with NFTs. That there'll be communities that form based on storytelling, based on unique provenance, based on certain unique aspects that come up. So we would not say that it's one should invest blindly. But if one has exposure to crypto, I would think that one should start looking at NFTs even today.
Right. There's one question that I've always wanted to ask Nishal, and that one is, yes, you have an NFT platform and you've talked so much about NFTs and you continue to do so. Do you own an NFT?
I do, but I don't think I've bought an NFT. Surprisingly, I've been airdropped or given NFTs by a few teams, but I don't think I've bought an NFT yet. And the reason is because we're building this platform. I wanted to first stay away from it and build it rather than focusing on, as an investor, I want to be a builder of this platform. And that's why I've not really gone ahead and bought yet, though, I really want to buy a few, and maybe over time I will. But right now I've just owned a few that have been airdropped to me.
Nishal, I do want to get an insight on how do you get an NFT gifted or airdropped?
I
Just join a Discord group and you'll get many of those. That's not a problem.
Add me in, please. Okay. Another question or another conversation that I saw on Twitter was about, and Nitin, please do take this question on, that, well, yes, tokenization is real world assets are insured and they're backed by an actual physical asset and it's held by a custodian. But how does a buyer ensure all of those things?
So some of the tokenization fundamentals redefines fiduciary constructs, risk, custody, and ownership. And in many cases, for example, things of the real world assets and mortgage-backed securities and gold and precious metals, real estate are prime examples to then work with, third parties. So I think what we have begun to see in the industry is today is a digitization play, where we have applied the technology to purely digitize the verification validation process using blockchain, and lead to some of the same intermediaries who exist in the marketplace to begin to provide those services. And that's the first phase. I believe the next phase would be disintermediation of many of these entities, where verification validation becomes systemic, where the custodians of these precious metals or custodians of the real estate assets or the county that does the registration of property is the one that's involved in verification validation, taking away a slew of intermediaries that goes from the picture, leading to reduced cost, greater efficiencies from that, a point of view. So to me, I see that as a valid play, both from enterprise perspective, but also the ability, especially in supply chain and movement of physical assets, is tied to a business processes that requires verification validation. Blockchain becomes the central technology to provide that function.
And while, of course, there are a lot of use cases, but Siddharth, tokens can be used as trademarks and copyrights and patented technologies, etc. I mean, my question really is that, yes, we are looking at the use cases increasing, and there is more adoptability, corporate adoption as well coming in for many of these technologies. But where or which sector do you see where it is highly potential and that the growth could perhaps be maximized going forward?
So I think there are definitely two parallel streams here. So one is around the retail adoption, and as I was like the previous panelists were mentioning, we will see fan engagement turned into NFTs because there are various different communities, be it cricket, be it our movie stars or film contracts or whatever they are, being more tokenized, being adopting smart contracts and all of that, right? So that will definitely happen. On the more enterprise or SMEs or regulated aspects, we will see fractionalization, we will see fundraising both on the primary and secondary markets being enabled by this new technology and hopefully unlock a lot more economic value.
Okay, I have one final question from all of you, but before that, I can almost see those poll results that we asked on the beginning of this panel actually coming in. The question we asked our panelists, or rather our audience and participants, was on what use case do they see of the tokenization of the real world assets. So nearly 25% have participants have said that they would use it because it would reduce the management costs, and 8% have said they would use it because it eliminates the middlemen here. But majority, which is 67%, says that quick and cheaper transactions is the way going forward, and that is the reason tokenization perhaps would be adopted. What is your sense? How do you look at these response numbers, Nishchal?
I think it's not a surprise that quick or fast or easy wins. It's always the case. And in fact, I think the whole progress of crypto has been because it makes finance easy and borderless. And this is what the internet did. And you've seen what has happened. The adoption of anything that's fast and easy is always far greater than anything that takes longer. So this is definitely in sync, and it's also a good a proof that people understand, because I've always heard that, do people understand what they're getting into? I think this poll is a clear it shows that people understand. It's everyone's really taking an informed approach. So that's a great thing to see in this result, I guess.
All right. What do you make of it, Sailesh? What is your sense?
I think it's as Initial said, it's kind of expected, but it's maybe a little bit underwhelming. That the broader capabilities of crypto are far broader than just quick and cheaper transactions. In fact, crypto is probably in many cases more expensive and today often slower than centralized forms of transaction. But today, in a centralized form of transactions, you're paying for the transaction in many other ways. Like in the United States, if you transact a stock with a stockbroker, they're typically selling that order flow to someone else who's making money perhaps ahead of you. When you do something for free on Google or Facebook, actually also there's a lot of data being aggregated, which has far more long-term value and may have ways to, in some ways, even harm you. That data may be used to do programmatic advertising on things that may be used to influence you, or certainly gets you to watch more short videos or more content online. So there's costs of using centralized systems that are somewhat externalities to the average user, which they don't see. And yeah, quick and cheap is certainly always good to generate user adoption, but there's other hidden costs in that. So elimination of middlemen is something, and really I would say is coordinating trust amongst distributed entities is I think the core tenet of a blockchain system. Has much greater value in the long term, but it's sometimes harder to see in the short term.
That point is well taken. And before we wrap this panel, I want to come to each one of you. I know it's difficult when we talk about this technology and the space, it's ever evolving and no 2 days are same. There's just so much changing, so many innovations, newer products happening. But even then, when it comes about tokenization of the real world assets, I want to come to each one of you and understand on where are we headed? What can be the next best case scenario? What can be the next best use case that we might see into this one? Nishal, why don't you go first?
What excites me the most about tokenization, both aspects, I think the first is the real world tokenization of assets. Take the example of real estate. Today, home ownership, it's getting more expensive. What if you could tokenize and you have to pay only a part of it for possession, and the rest anyone can buy those tokens as an investor. So an investor and home, someone who's going to stay at the home, this combination might really work out with tokenization, and also it opens up the markets to a global audience. I think in the online world, the amazing thing is again the DAOs and fractional ownership of online assets. That's something that is very exciting.
All right, that is what to look forward to. Nitin, you go next, and what is your sense on where are we headed from where we are?
Yeah, and I think on topic of tokenization, fractional ownership does open up the markets to participation from entities that were in the past either prevented from participating due to high capital requirements or due to opacity of value transfer system. And I think that fractional ownership opens a whole new range of asset classes and asset types, unlocking sort of economic value of locked capital due to either inaccessibility of investment opportunities or simply access to the markets. So as I envision the world, which is the theme of this session, is imagine the folks who are on fringes of our society, the farmers in Uganda, the farmers in India, who would like to participate in global economic system, should be able to easily participate with whatever little savings and whatever little investments they have and benefit from that growth, regardless of where they are. And that's why we compare what internet has done for information. We expect blockchain to do that for things of value, is truly create an egalitarian platform for global accessibility.
Siddharth, you go next.
Thanks. So exactly agree with my fellow panelists here, and it's the 24/7, 365, always on kind of nature of tokenization, which excites me. It's high time we have that kind of a system, and the tokenization aspect doesn't really care if you're a person on the street or a hedge fund manager. It's open, transparent, democratized, and given like the Indian technology landscape, right? So anyone with can write a few lines of code to represent anything from a physical or a digital good, or an access right, or a mix of their all, and even steer a decentralized network of actors if one has a good game theoretic model around design. So that's what is most exciting about this.
All right. Well, yes, the fun part or the interesting point in conversation with all of you is that you guys are so excited, interested, involved, indulging into this conversation and the technology itself. Salesh, you go next.
The parts that I'm most excited about are consumer social applications that I think will be reimagined with crypto. That will enable people to express themselves in far different ways than they are limited by centralized platforms. And I think that will be a form of expression or a form of displaying unique aspects of your personality that will enable us to be far more comfortable with all the time that we spent online. And we'll see brands form, we'll see different sorts of clubs and societies formed, we'll see new forms of communities and people that we connect with. And it will, I think, just change the way that we live in a way that, current social networks, largely reflect offline behavior or offline networks. Twitter goes a little bit further than Facebook in being a mouthpiece, but Facebook is very much representative of people that you know. But beyond that, given the amount of time we spend online and the varied interests that people have, there's limited abilities to express and connect with folks. And we're quite looking for folks who are working actively in these areas.
Oh, well, yes, the possibilities are endless, and there's just so much to look forward to when it comes to this technology. Gentlemen, thank you so much for spending your evening with us. This has been a very interesting, exciting, insightful conversation with all of you. Thank you so much.
WazirX presents CNBC TV 18, the Indian Crypto Summit 2021. WazirX presents CNBC TV 18, the Indian Crypto Summit 2021.
Welcome to the last panel of the day now, and this is on crypto startups and the blockchain technology within Indian markets here. And we do understand that there are more than 300 crypto startups here. There are various success stories and a lot of learnings that we can take from there. A lot of crypto started up in India, but have made it on the global platform as well. So what we will try to understand from our panel is the opportunities within the space, the concerns as well. The roadblocks have been quite a bit. And then, of course, the scope of funding, growth potentials, and vision is what we will try and understand. Joining us for the same is Pranav Sharma. He is CIO, Woodstock Investment. Darshan Batija is co-founder and CEO, Wall. We also have with us Sandeep Nailwal, who's co-founder and COO, Polygon. So let's start with you, Sandeep. And we have seen big names like Peter Thiel and Mark Cuban invest into Indian startups. What has been your sense on where would you rank India when it comes to startups within the space?
I would say that India is still not like in the top 3 or top 4, which ideally India should be. I think US, then Berlin, and China is also pretty far ahead in that. It's a good journey from there.
Darshan, how would you read India as a market? I mean, we've seen a good growth, as Sandeep said. Yes, we've started on a very low base, and we perhaps are ranked number 7 right now. But what is the vision that you think India can have with the kind of expertise, with the kind of personnel that we have in India?
I think there are 2 ways to look at the Indian market. One is the customer base in itself, which I think is absolutely exploded over the last 18 months. Since the Supreme Court overturned the banking ban of 2018, we've seen crypto absolutely explode. I think even from November of last year up until this point, we're seeing anywhere between 40 to 50 times the daily transaction volume of cryptocurrencies. And I think if you look at the top crypto exchanges in India, there are more customers on crypto exchanges than the most popular stockbroking apps as well. So it's very clear that the Indian customer wants to own crypto. From a developer standpoint, I think India's always been one of the premier destinations to hire from, partly because we have an exceptional engineering culture, and also that we converse in the global language, which is English. With regards to crypto, I think there's still ways to go for the broader tech talent to get into crypto and blockchain. And I think there are certain parameters holding the market back. One is, of course, regulatory clarity, because people take significant risk joining an early stage company as it is. You don't want to add a regulatory overhang over that in the parameters that you have to weigh in. And I think with some regulatory clarity, we're just going to see the industry absolutely flourish. We're going to see India's deep talent network really benefit from this new technology.
You're right about the regulatory clarity here, Darshan, because even without that, we've seen a huge explosion when it comes to investors within cryptocurrencies, whether it's retail, whether it's tier 2 or tier 3 cities, even HNIs institutions for that matter. But, even without that, we've had these big names like Peter Thiel and Mark Cuban and Tim Draper betting on India's crypto startups. What is the potential that they see within the Indian markets? And that question is to you, Pranav.
So Manisha, here, let's say, just taking forward from what Sandeep mentioned, we are still at a very nascent stage. But the kind of excitement that we are seeing from both crypto funds globally struggling to show alpha, and when they are seeing that this space has gained a lot of feet and a lot of legitimacy because of the regulations which have come up, globally, custody, sandboxes, a bunch of other, frameworks which have been created globally. It has created a space in which practically all the known funds, they have reached out to us. They're willing to partner in whatever capacity. Even folks in Singapore are very keen. As far as, folks in Japan, Korea, they're keen to build rails and bridges so that, we can support, Indian startups, together. So there is so much of excitement. And I totally agree with, Sandeep and Darshan, what they mentioned, that in many ways, if there is clarity and if there is, I would say focus, here from 300 to maybe 3,000 journey can be much faster.
So my question exactly is that, Pranav, and I want to follow through on this one. Even as there is no regulatory clarity, we've seen a lot of crypto startups emerge, and we've seen a lot of Western money come into the, in sense of funds come in here. If there was regulatory clarity, what kind of a growth potential are we looking at then in the Indian markets?
So when you say clarity on what? I mean, so first thing is, what should be the treatment of, let's say, crypto investments? I think this is one thing which really bothers investors, whether it is retail or institutional investors. So if there is framework around taxation, if there is framework around treatment of these assets as whatever, let's say commodity or whatever it is, that clarity would really help in terms of propelling this forward. I mean, in a country like India, of course, the social pressure also plays a significant role in terms of getting best of the talent to be attracted into this space. So I would say there's a lot of talent, a lot of money which is waiting on the fringes, to sort of come into this space. There is one more thing which requires, I would say, clarity, and this is something which is probably not only on the government but also on the industry as such. Also, is in terms of having very strict rules and regulations around AML. Because I think money laundering is something that really bothers the government. I mean, no government in the world, wants the fungibility of money without having accountability. So that is something, if there are solutions around it, I think this can open floodgates for practically the entire India to participate. Like very much like what Nikhil Kamath of Zerodha mentioned, that exchanges, the crypto exchanges in India can potentially surpass even the online brokers as a space.
What is your sense on this, Sandeep? Because you started in India and then you took Polygon out. What are the concerns? What are the roadblocks that Indian markets are facing as of now when it comes to this space?
I mean, I would say that there are two types of startups, right? So when we are talking about all these, roadblocks and all that. So one is a startup which is building for customers in India, right? So for example, cryptocurrency exchanges and all that, they actually want to cater to the Indian customers. And then there is, on the other side, there are startups like Polygon or like some other startups like DeFi or NFT startups and all that, which do not differentiate in their clientele in terms of the geography. And I would say that regulatory clarity is definitely affecting the first kind of startups which are actually which can actually build these solutions for the Indian users, Indian customers. But what is happening, and this is actually more kind of concerning for me also as an Indian, that when the second kind of startups which are not building particularly for Indian geography, so they don't have any physical let's say stores or delivery areas or whatnot, like compared to the web2 startups, they don't need bank accounts to kind of process the payments and whatnot. So for them it's very easy to simply move their base out, because if let's say the regulatory uncertainty remains, Indian government should come up with, like the way we have special economic zones, maybe have some special crypto zones or something like that, where the entrepreneurs can work from, right? And otherwise we will see a huge part of these like 300 odd startups right now we are saying, but once it grows to even 3000, many of them would be simply moving out of India, and that talent will go out of India. So that regulatory uncertainty definitely is a larger danger for India as a India as an economy, I would say, because it will lead to a lot of talent outflow.
It all boils down to regulatory clarity at the end of it. But even without that, we've done a lot of work here. So Darshan, just following up on what Sandeep just said, what we have seen right now, and this is a very hypothetical question really, but a lot of questions are asked around that, on where we stand and what is the potential or what is the vision that India can really go up to. Has there been any maths or any calculations done on that?
I think anecdotally, if you look at the largest markets from a sheer customer perspective, you'd rank US right up there, but I'd be hard to find another market quite as attractive as India, both for domestic companies or evaluating servicing Indian customers, as well as international companies looking at this large potential market which is completely underserved. So the clear from a demand standpoint, it's very evident that A, the customers want to own this asset, and B, there's a tremendous amount of value, assuming you can create a positive environment of entrepreneurship, can be captured within the Indian subcontinent for the entrepreneurs as well as for the investors here. And I think it's if I were to sum it up, it was a lot harder to start in 2018 and maybe 2017 when Polygon started, and at the moment there are many more market forces simply driving it to be easier, more education, more awareness of crypto. A whole 18 months since people have been transacting in crypto definitely helps. Marquee investors coming in and taking significant positions in local companies. But I think when we look at regulation, it's not an if in my perspective, it's a when. When we do, we should look at ensuring that we don't let the next the dominant player be an international one if we can avoid it, because you want to onshore the company if possible, because you get to play at least the government gets to play a front seat with the entrepreneur or with the entrepreneur community to build that value for the Indian customer base. And I think India's done a fantastic job of doing so in other industries, such as manufacturing with tariffs, such as information with local warehousing of data. And what does that look like to ensure that okay, if this is a large market that the Indian government is willing to regulate, how do we ensure that given that there was I would say a lag between Indian entrepreneurs raising capital versus international ones, how do we make up for that time? If there are ways we can support Indian entrepreneurs to capture this market, that would be I think cherry on the top.
Well, I really hope the regulators are listening to all of that. But as you were, saying, Darshan, that raising money in 2016, 2018 perhaps was difficult, and now it really seems to be coming in right now. And I have some numbers which I want to put out, and you perhaps would have the latest ones in. But in 2016, Indian cryptocurrency companies raised nearly $6.3 million. And in this year, the first half of this year has seen $99.7 million. So that clearly is a big jump. And that is my next theme to all three of you in sense of questions. And Sandeep, why don't we start with you first? There is funds coming into the Indian markets, and whether it's Indian or international, with international, supportive, how have you seen the money flowing in? Is there a user case which is getting easier funding than the others? What are the funding agencies or the funding companies really looking at?
Investors always knew that India has a lot of talent in terms of its engineering, resources and like other things also overall. It was just that we needed some good examples, which I think in the last 2-3 years there have been some successful Indian companies like Instadap is one, and then there are like multiple others. CoinDCX, WazirX have done pretty great overall. So I think now everyone wants to find the next, let's say, Polygon, next Instadap, or next WazirX from India, right? So I think that is driving a lot of funding into the Indian space. And I can now, like, we generally, like, I used to, I think I said that to Pranav or Darshan also back in the past, like I maybe, that it was my personal goal also that, to make this, funding easily available in India. And I think for like, not for me, I think many of us like that. And Pranav has played a very, great role to providing that funding to Indian startups. And I mean, overall bringing Indian investors on a global space, global level. But I think, like, yeah, overall, as I said, that talent is available in plenty, and now you have good examples. So I think VCs definitely want to do that. And also I would say that there have been the other Southeast Asian economies have also produced a lot of crypto startups in the past. But unfortunately, not many of them, have done that great. There are only few examples. So, from this part of the world, I think India is getting a lot of special attention. And also internally, I feel that Indian entrepreneurs are like absolutely world class. Like, I interact with a lot of Web2, entrepreneurs in India, and Web3 entrepreneurs. And I think the quality of the entrepreneurs, when I kind of interact with let's say the foreign entrepreneurs, I think it's absolutely top notch in Indian space. And I think it's about time that it will come out in more and more glory at the global stage, because for the Web2 startups, I think funding and all those things were not that great, because I think we have had some examples in the Web2 space, like e-commerce acquisitions and all that, where the investors did not were not, like, at least investors feel that they were not treated fairly. And due to that, there was a huge gap in India from 2013, 14 to maybe up to 17, 18, 19, because a lot of VC money was not flowing into India. But for crypto, since many of these funds do not require local setup and all that, and they can fund in stable coins and all that to these foundations which are set up outside of India. I think now that those floodgates are slowly opening more and more. And as I was saying, that once this Indian entrepreneurial elite kind of starts joining in more and more, the global investors are going to realize that, okay, this is like, India is a gold mine. And I'm pretty sure that our entrepreneurs are going to have a very good time.
3 to 5 years, we are watching that. I was reading somewhere that 10% of global GDP could be stored on blockchain systems by 2025, and that clearly is not too far away. But there's another thing that I was also reading, and Pranav, this question is to you. There are 32 unicorns in making in India, and only one is a cryptocurrency company. How do you look at that number?
Manisha, it's an interesting question you ask, and maybe I can be more candid on this. And if you look at even unicorns, and no disrespect to them, but most of them are not innovations. But let's say when you look at folks like Polygon, or let's say even what Darshan has done in terms of building Vault in a certain way, whatever I hear from the market, there are a lot of innovative aspects they have taken care of, and they have sort of gone against the tide and built really formidable businesses. And I'm sure world will wake up, let's say in a couple of years, to really understand what Polygon and what, let's say for example, Vault had become, and what they actually missed out. So I don't, no disrespect, but I think a lot of these unicorns that you see are also emblems of a flourishing capital market, and of course no discredit to the investors and to even the entrepreneurs who have done a phenomenal job building these startups. So and I think going back to the perspective that two things. One is in terms of regulatory clarity, which I think will further explode the system, which we have discussed in detail in any case. The second aspect that Sandeep mentioned about is creating those role models. With those role models emerging, a playbook emerging, I think the unicorns in this space will only multiply as this space grows. So in my view, these numbers can look very you can say lopsided right now, but the kind of innovation that is happening. And let me just throw some attention to what Indians are doing. Even in my past 2 days of conversation, one of the portfolio company that I spoke with, they're building a brand book. So I was, I got goosebumps, because honestly, I've not seen any startup. I have invested into a bunch of fintech startups, enterprise, SaaS, etc., and none of them have paid so much of attention to building a brand. And when somebody thinks about building a brand, that clearly means that they want to build their startup in a certain way, and they want to take things far forward without making choices, and they want to calibrate themselves to be benchmarked with the best. So that brings me to once again what Sandeep mentioned, is that
emerging here. Darshan, what is your sense? Another thought or the other debate really is that the reason you have this funding coming into India is deliberate, because investors do see the potential India has. So when you look at this funding, and as Pranav also pointed out, what kind of a growth trajectory are you expecting when it comes to funding into Indian startups?
I think it's important to work back from the kind of value the entrepreneurs are creating and the quality of entrepreneurs. And if we look at historical trends on where the most valuable companies out of Silicon Valley came out, you can attribute them to very, very few early stage companies of the 1.0 internet era, PayPal and the PayPal Mafia being a classic example. I'm sure you've heard of the Flipkart Mafia in India too, which is them leading significant innovations, moving against the tide and building an e-commerce brand from scratch three years before the international competitor really stepped foot. I think we're seeing that trend in the earliest wave of crypto companies as well. Polygon, in fact, is one of Polygon's alumni network is one of the best you can find out there, but you're going to see more alumni from the top 3 or 5 crypto projects pick up and learn from the first wave of entrepreneurs, figure out how to raise better, figure out how to build a team for the new dynamic that we're transitioning to. And once you've actually been there and done that, especially in this stage, it's a much easier ask from the investor to trust them with the significant amount of capital that they're allocating to this company. It's interesting to note that out of the, I believe that in the next 12 months, there are going to be $5 billion companies out of India. At the moment, there is one. I think in the next 2 months, there are going to be 2. It's not us at the moment yet, but fairly certain that it's going to be 2. But in the next 12 months, we're going to see $5 billion companies. If you look at the data, only 1 out of the 5 companies were actually backed by an Indian investor. In fact, at the earliest stages, that too, not even follow-up rounds and the like. So most of the risk has been taken on by international investors. And we think if, let's say, the capital, the venture capital raised from India for India can take a larger allocation of the crypto startups, we're going to see much more value being built here, because there are advantages to raising from local investors, such as networks, such as help with hiring, such as help with everything that comes with someone familiar with your local market. So 300 to 3,000 is one good way to look at it, but I think one unicorn to 5 to hopefully 25 in the next 24 months is something that I'm optimistic about.
All right. You guys really are excited, optimistic, and there's a lot of asks from all of you. And why not? I mean, the way this market is growing, India should be getting its fair share as well. And I absolutely love the way you said that special economic zones, gift city, etc. There are just so many ways of doing that. So we have some questions coming in, which I will put to all three of you. But before that, I really want your final comments as well. And why don't we start with you, Sandeep? And what is your sense on where are we headed from here? I mean, this market is ever growing. There is something to learn every single day. So there are startups here, absolutely. There are people self-learning, interested, excited about what's happening. This perhaps is the biggest disruption of the century. So what is your sense on where are we headed? What is the scope and potential from here on?
Yeah, so I mean, as you were saying that there's so much to learn in this industry. Like we have a joke that crypto is easy. You just have to read 16 hours a day, right? So it's like there are so many things happening in this, and I mean, on a fundamental level, I feel that this is not like a technology. It's basically a fundamental paradigm shift in how we human beings interact with each other, how we form groups, how we form companies, and all that. And it is going to affect every aspect of our lives, be it our corporate lives, be it our banking, or even in the coming years, like how we interact online, social media, how we share our data and all that. So it's going to change a lot of things. So there is definitely this industry is going to touch every aspect of our life in the coming decade or so. So there is no doubt that there is a huge growth potential. And knowing about India, that I generally joke about that the number of engineers in India is probably more than the population of entire countries, some small countries, right? So I mean, there is no way that India is going to be behind on this. We will definitely be one of the top. But then if we want to be absolutely the top player in this space, I think our governments will need to take faster stances, or provide some of the kind of framework sandboxes to kind of let this industry flourish. But even if they don't provide, as I was mentioning, that because now it's easy for these foreign VC capital investors to invest into Indian startups because of the nature of global nature of crypto. The investments and everything are already growing, and Indian crypto ecosystem is growing at a breathtaking pace. And if there is some more clarity and regulatory framework from government, we are going to go absolutely ballistic. So I'm very optimistic, and I feel that we have good days ahead for us.
Fair point and well answered. And I'll take a next question now. And this one says that nearly 612% of a rise in number of cryptocurrency users is what we've seen in India from 2020 to 2021. Is there just investors, or do you see enough developers and talent to invest in as well in India? Darshan, why don't you take this?
So that 600 number is definitely, I would say, on the lower end of the data that we're looking at. And I don't see that slowdown anytime soon. The good thing is, when we were interviewing folks maybe 24 months ago, maybe before that, they had to be informed of what crypto is and why it's relevant. And post that, we would also need to answer that, is it legal or not? Thankfully, those questions are coming up lesser and lesser. And given that we do have between 10 and 15 million unique customers owning crypto in India, some of them ought to be developers. So, and some of them must have gained this huge financial upside that we saw in the last 12 months. So their pockets are much better off for crypto, which in turn pulls in a whole new wave of talent, a whole set of more mature entrepreneurs, as Sandeep was rightly talking about as well. And along with the fact that Gen 1 crypto companies have a very strong alumni base, I think all of those, along with the right other elements such as Indian investors starting to take positions in crypto companies, are going to lead to just a fantastic growth in terms of employment, in terms of economic upside, and if let's say the folks own this asset. And I think it's on us right now. We cannot point the finger at anybody but ourselves. We have the opportunity to completely capture this market. I believe in the next 5 years, India could be the #1 crypto destination if we have the right ingredients in place.
And there couldn't be a better ask for a final question for this panel. And this one is, what would your advice be to the new startups in India? Sandeep, why don't you take this? Actually, all of you should be answering this. What is your advice to the startups in India?
My advice is simple, that don't be afraid of taking the first leap into the space, and you have everything built out here now. There is funding, there is developer community, and there are like people who can help you out. So just if you want to build something in the space, just go out and start building and reach out to people like Pranav, Darshan, me, like anybody else in the space, and everybody is very helpful. And this is like one good thing with crypto is that mostly it's a very tightly knit community. Everybody knows everybody. So you just need to take the first leap of faith and start building, and after that your ways will be your doors will be opened by a lot of helpful community members. And this would be one of your best decisions in your life. Like whoever, like I've brought a lot of friends and family into crypto, and I always keep telling them that starting in this space is going to be one of the best decisions in your professional life. So yeah, I fully stand by that.
Absolutely. Pranav, what is your advice to startups? What would you say to them?
So I think I'll make a very simple point. I mean, Sandeep spoke so well, so I'll just add to this by saying that when we set up as a fund, we missed out actually on investing into both these gentlemen, both Polygon as well as Vault, literally by a whisker. In case of Polygon, the private sale closed. We wanted to invest in them. And in case of Vault, basically we are not ready in terms of making equity investments. We are still, setting up our equity investment practice. So practically that would have been our first equity investment. But having said that, what I want to say is that, these are like amazing friends. These are relationships, in a way that, they can reach out to me at any point in time. And, and they do that, practically we complete each other's sentence in many ways. And wherever, I need something, I need some clarity, I always reach out to them. I still remember that when I needed custody partners, for our fund, I reached out to Darshan, and Darshan instantly made those introductions. When I, needed, some cross references for certain startups that we're investing into, Sandeep, just put everything aside, and he sort of, was like, okay, let me support. And this goes beyond whatever little successes, we have got. And at least, from my perspective, I see that our journey has, just begun. And that is how we see various, startups, here. And all I can say is that, whatever fraternity and whatever, you can say sort of, people that we have here, everyone is extremely raw and hungry with, very, I would say, practically no air, huge respect for entrepreneurship, huge respect for talent. So, of course, as Sandeep mentioned, the funding part is something which in any case is largely taken care of. If let's say at Woodstock we are not able to fund you for whatever reason, maybe you don't fit into our thesis, but that will not stop you from realizing a dream, because there is funding aplenty there. If you need any other support, whether we fund or not, that doesn't really matter. This is exactly what I spoke when I mentioned about Polygon and Vault. Those relationships and those sense of supporting the entrepreneur will always stay. This is the ethos in this community. And so if you are a talent, if you are looking at solving the next complex problem that is going to shift gears in this particular space, you're fully encouraged, and you can reach out to any one of us, and you'll be part of the family, and we'll help you to the best extent possible we can.
That is very, very well put out, Pranav, and I can absolutely vouch for that. I mean, my interactions with you guys also has been beautifully and immensely enriching whenever I have spoken to all of you. But that question to you as well, Darshan, now, what would your advice be to the newer startups or people who want to actually jump into the space?
There are a couple of ingredients when put together leads to magic. One is, especially in the entrepreneurial journey, one is, and most importantly, whether the market is large and whether the market is also growing. And I think the last 24 months proves that nobody really knows what the ceiling to this market could be. So anything you do that creates some value for few people has elements of tremendous growth. We've heard of many stories in the crypto space where there were 1 or 2 developers who spent a couple of months, maybe 3 months, to get an idea out that led to them building, I think, multi-billion-dollar companies in the crypto space right now. Secondly, you need the right talent, you need capital. The talent is, of course, on how well an entrepreneur can excite everybody to work in the space, but the space helps with that too. And capital, as we all spoke, has never been more available to the crypto community. So all you have to do is get into the community. The word community tends to be used a lot to describe the crypto space because it truly behaves like one. We're part of a very positive sum mentality environment where, as long as you can convince us or show us that you're trying to create positive change for everybody involved, everybody or most people that I know will instantly get to help you in the best way that they can. So just do it. I mean, I don't think there's a better way to summarize that, for sure.
Well, thank you, gentlemen. And with that, we come to a close of a very interesting evening, the first Indian Crypto Summit 2021. Our esteemed guests within the set panels have decoded the current global scenario, the factors influencing the crypto space, the investment models that you can perhaps make use of. Our speakers also have spoken about on what they want from the regulators, the relevance of CBDCs, the job creation that the sector has brought about, and also the crypto startup landscape and the future of finance and investment. With that, I would also want to take this opportunity to thank our guest participants and audience and all who have worked towards this summit. We appreciate you joining us for this evening today.
WazirX presents CNBC TV 18, the Indian Crypto Summit 2021.